Hi there, just a short video that does more justice to my YouTube name, Euro Gold Exchange. It is about gold. If you have physical bullion in your own possession, at your own available at your discretion, hang on to it, because it's worth much more than you think. The price is completely artificial. And you might say, well, yes, that's a Gata conspiracy talk, and or on the other hand, you might say, well, of course, you're right, and it's true. But the open evidence of the fact that the price is completely not representing the actual amount of physical gold is overwhelming at the moment. It really should affect the gold price, but it can't, because the gold price is not real. Just to go through the gold price is usually the COMEX price, and if I sell my gold, they say they use a Bloomberg quote, which has to be close to it. It's nothing near the real physical gold price. You should basically discount all physical, gold sources that are not real, and then recalculate. So take the current assumed amount of gold for sale and the current price. Discount the amount of gold for sale that is not really there, which is almost all of it, and then try to recalculate the price based on that volume. And just to go through the list, the London Bullion Association is leveraged 100 to 1. They admitted it themselves, they didn't think about it. It's a completely fake market. There's no real gold, and the more pernicious aspect of it is that people have contracts that say, I have a right here on paper to 1 kilo or 1 pound or whatever it is, or ounce of gold and silver in the London Bullion Association vaults, and it's not there. So, we might get a big crowd on the Channel Tunnel train of people that want to go to get their gold in London, and then of course you have to wonder, is it in Zurich? Is it anywhere? Because they basically have contracts that force to deliver, as far as I know. The COMEX has switched and adapted their contracts, so they no longer have to deliver. So it's a completely fake market. The price is made by manipulations of a fake market. And as the people from the London Bullion Market and Goldman Sachs explained, was that if you're in the know, then you know which signals are given for an uptick or a downtick, so you know when to buy and sell. And you just do that in tandem with the big banks, and you get rich. And if you're not in the know, or if you're not a friend of the bankers, then you're losing every time. ETFs. Hint Capital has a presentation that I'll link to next to this video, which is amazing because they go through these contracts for the ETFs, and just when you think you really need to have that gold, when the going gets tough and you get a stock market crash, that is exactly when they have a right not to give it to you, and actually when they have a right to make up their own mind whether they will give it to you or not. It's in the contracts. So the London Bullion Market is worthless if you're talking about a real means of exchange in a post-apocalyptic world, let's say, that you have something in your hand to do something with. The COMEX is fake. The ETFs are fake. Well, what does that leave us? Not very much, of course. But, of course, you can have gold mining companies. Well, we already learned that they are trying to get rid of their futures and the books, and they're really not worth that much. And, of course, the big factor there is oil price, I think. And that's my own amateur opinion, is that if the oil price spikes or goes up too much, then how are you going to get your gold out of the mountain, refined, transported, and etc. to any place? And then on top of that, there's a very funny story, because a while back there was a story about tungsten gold bars delivered to Hong Kong bullion market, and it's just funny how these big shipments are not assessed and not really checked. And now there's another example from Ghana, an article about the fact that in the United Arab Emirates, people are finding that really shipments of tons and tons of gold are all fake, that there's no gold in them, and people are actually dying of heart attacks there, which I think is pretty fair. But what these fools, which I have no other name for them, because if you buy gold, for, and I guess the total represented value is 200 million or something, which is not a big amount in the current scheme of things in dollars. I guess the US dollars in the US have to be looked up at differently than US dollars in circulation around the world, because the US dollars in circulation around the world are used to exchange real goods and services, while in the US it's all fake money going to banks. But anyway, $200 million of gold, and these assholes don't fly over to Ghana to check the shipment. So what they do is they send an email to Richard the third of Koalia village in Ghana, and they make some deal that they have some assaying going on in Ghana. Who trust those assayers? Where do they come from? Fake documents, I guess, and they're sent back and forth. They get samples, which of course is real gold, which is not a big problem because it's paid for. How that's just so easy. And then they're sitting there in the docks in the United Arab Emirates waiting for their container shipment of gold, and it's all full of sand, or it's mud, or steel bars coated with gold. Well, if you cannot distinguish a steel bar coated with gold from a real gold bar, you either have one bionic hand, because steel is much less heavy than gold, or you don't have any hands. You don't know how to read scales or something like that. So it's their own fault. They've been fooled out of their money, and they were too lazy to fly over to Ghana, maybe because they thought it was dangerous. And these people on the other side in Ghana are anonymous. Can you imagine that? And then you can read that the banks in Ghana make a nice profit. But that gold is not real either. So you see, the United Arab Emirates and everybody with money has tried to buy gold in the last years. And the people that piled into ETFs were buying shit. The people that piled into the COMEX buying shit. The people that piled into the London Bullion Exchange bought nothing. And the people that actually thought they were buying real bullion in the vaults of a true assayer were buying steel bars plated with gold. So, and now combine that with the non-correction of gold against the population increase, which is a 5-fold increase. I calculated before that it would be in my... Of course you have to laugh about it, because I'm really not a full-time gold expert. But my calculation was that an ounce of gold should cost about $24,000 to compensate for basically the population growth and other factors. There's another video about it. Now go figure what it would cost now that all the ETFs owners, they will dump those ETFs and they will try to get the real stuff for their money. What will happen to the price? It's just an explosion waiting to happen. And then there's another funny fact, which is, I think, is not really serious, but there is a Hindenburg omen, which is a calculation of the number of highs and lows in the stock market combined with other factors that seem to predict stock market crashes. So some people expect that in September. It's fine by me. Why keep the fairground lights on and everything moving and playing and the music on loud, and if there's really nobody there, if there's really nobody enjoying it, just shut the fairground down. It wouldn't be surprising if the whole New York Stock Exchange would simply flip the switch and quit operating. They're so unreliable, so unbelievably fraudulent, so infested with flash trading and front running and all kinds of price manipulations, that they should be as a whole considered a criminal racket, and everybody walking around there arrested, put into little buses and brought to jail. That would make sense to me, perfect sense. But thanks for listening.